This is Charleston's retirement coach, Brandon Bowen.
Thanks for subscribing. Thanks for downloading. Most importantly, thanks for listening. This is Charleston's Retirement Coach Podcast with Brandon Bowen. It's all powered by Bowen Wealth. You can get more when you visit bowenwealth.com, and you can find that and all the information in the show notes. My name is Mark Owens. Now, let's get to the show. It was a wild week for the United States of America. Have you caught your breath yet?
Yeah, I tried to catch up on my sleep, How let you stay up?
I was up until about 1:30, fell asleep, and then got woken up at about 4:30 when they called it by my phone just exploding.
Well, you were better than me. I called it before that. I was like, take a deep breath, go to sleep, as I tried to. And then, you're waking up, and then that's the first thing you do. You roll over, you flip on the TV. Oh, my gosh. Fun morning.
We're going to have a lot of great conversations here this week about the Trump administration and what this more importantly means for our money and our retirement and our financial situation with a new administration coming into the White House. I think more than anything, I'm just glad it's done.
Yeah. Just every commercial break.
Yeah.
They keep talking about the undecideds, and I'm like, does that person even exist anymore?
Right.
Who hadn't made up their mind?
I do feel kind of lonely, though, because for about 6 weeks, I was getting 10 calls a day and 15. Now my phone's really quiet. It's just my wife going, "What do you want for dinner?" So,
that's good.
So let's get to it here. Real quick, that number, 843-890-2400, because there's probably somebody listening this weekend saying, I had to get the election behind us, and now I'm ready to get serious with my strategies. So 843-890-2400. So as soon as Trump won, I guess it was Wednesday morning at about 2-3 a.m., well, the next morning, Wednesday, the market took a big swing up. So what does that mean? Is that typical in an election regardless who wins, or is that the Trump effect?
Well, I would say for this one in particular, it was a lot of optimism on, I would say, deregulation. And the good thing is we have 4 years previously that we can draw on. So we know kind of what he's about and what he's going to try to do, with his America First agenda. And so that was Wall Street, I think, going like, okay, we've got a business person back into the office there. We've got someone who is going to is just continuing to say, I want this to be America's, what does he call it? America's golden age, kind of just of this boom and this growth here coming. So that was very exciting to see. And that's what the markets did after markets. And then the market opens up so much higher. That's just fueled by so much optimism.
What do you think? We know you don't have a crystal ball, but what do you think what should we expect and I'm not looking for the next 4 years, the next 12 months within the market?
So what I've been saying to my clients, even in the last, few weeks, couple months here, is that we do anticipate this next year to be kind of very choppy. Okay. I would say very choppy. So maybe sideways. And the main reason for that is just because of the current levels. They are at nosebleed, high in the sky, 40, 50,000 foot, if you will, valuations on these companies. Okay. And so if you've got someone coming into the office saying that I'm going to put tariffs on China and Mexico, or maybe everybody or whatever, right? We know that, potentially tariffs could cause a bit of a panic. Okay. Right. And anything that might happen with levels at their where current stock prices are and valuations are, it just takes just the slightest little thing to cause an avalanche. So, your question is, what about this next year? So we think this next year could be sideways at best. Okay, meaning in 1 year, maybe we're back to these levels, but probably there's going to be a gorge or a big correction between now and then. Okay. So I would encourage people, you listening, right? You might be happy, you might be mad, whatever. But we think, just because of current levels, because of a change in administration, one that says, okay, we're going to start putting tariffs, we're going to start trying to renegotiate deals. And so the way that he tries to get people to the table is he says, fine, we're going to stop contributing to this partnership or tariff on you guys. And so that's going to cause companies, if they were buying from Mexico and China for, cheap prices here, well, now they have to either overpay that or find, where they're going to start purchasing their goods and things. So it's going to be a bit uncertain here for a bit. So if you've got your retirement, and bottom line, with all of this, again, don't be too optimistic here because your guy might be back in the office, but right. If you have a large percentage of your portfolio in equities or in the stock market, right, then I would say please pick up the phone and call me, because we've got to start putting together a plan for you, right? A retirement plan. If you're close to retirement, every day when people call my office and come in and I see that you're nearing or in retirement, we have got to start putting guardrails up on this money, because you can remember 2008. Right. If we were to go back to maybe 06 and 07, I bet you might have been optimistic at that time too. I mean, that's the thing with crashes is nobody knows, when the next one's going to happen. We might think it's just a little, it's just a little 5%. Oh, it's just 10. Oh, shoot. It's, it keeps going. And now just the bottom falls out and we're in a full on market crash. Okay. So the big thing is we got to make sure we're only risking an appropriate percentage, especially if you're near or in retirement.
Okay, Brandon. So somebody's listening this weekend, and regardless where your emotions are, you got to take your emotions out of retirement planning. So how can they reach out to you and have a deeper conversation about preparing for what's next?
You can call or shoot a quick text. That is 843-890-2400. 843-890-2400. So we can have a second opinion on your money, right? So I've been talking about people that have too much exposed. There's also a camp of you who have been sitting on the sidelines. You've been saying, I'm just going to sit on the sidelines until I see the results of this election. I'm saying don't then go, yes, and now you buy fully into the market just in time for a crash.
Right.
Right?
Yeah.
There's kind of two camps here. So the big thing is I want everyone to, get a second opinion. We can take a look at, are you risking an appropriate percentage? Is it time to start putting some income plans together? Things like that.
843-890-2400. You can give them a call or you can give them a text. We have a representative from Bowen Wealth that will answer your call, that will answer your text. It's not AI. It's not a call service. It is a member of the team. Who's monitoring this weekend, Brandon?
Tanya, every weekend. Unless she's sick or something, that's her role.
That's it. So you'll talk to Tanya, you'll text with her, you'll speak with her, and help set up that consultation at a time that's convenient to you and your schedule. 843-890-2400. I want to get deeper into the families you serve, because you mentioned that, you've talked to some people who have kind of had the money on the sidelines that are waiting to see, all right, what happened with the election. With your clients, with your friends, your families, the people that you serve, are they worried? Are they relieved? Or for a lot of people, is it just, let's just stay the course? What are you hearing?
If they're already a client, then that would mean we've already put a plan together, an income plan for them. So some current clients of mine that they've been clients for a while, but they actually just sold their house. Okay. They downsized. It was great. They sold for over $1 million on their house. So they came in and said, okay, we've sold the house here. We've got now about $1 million in the bank. All right. We got $1 million in the bank. And so we said, all right, well, now we can really design this income plan for you. Right. Before we had a few things going on. They were, more so on the defensive side. So now that we have all this liquidity, what we did is we said, okay, with your 1.5 million, I said, what's most important to you guys? What do you want for this money? What do you want it to do? And they were like, you know what? We're 70 now. We can't go back and work again. We love how we've just basically cashed in on our real estate here. This is almost like we feel like we've hit the tape, the finish line here. And they said, now what's important to us, Brandon, is we want low stress. We want income. We want to be able to just sleep now. We've downsized. We want to sleep 8 hours a night. We want to just know that we can travel. We can do things with the kids and grandkids. And I said, okay. I was like, well, so then how much of this money are you comfortable having swings, wild swings up and down and things? And they said, you know what, maybe 30%. And I was like, that was kind of the number I had in my mind, maybe 30 or 40%. So then I said, if we were able to take, 60, 70% of this money, let me show you a diversified income plan. So we did that. I showed them we've got about 4 different buckets going on. They've got 2 Social Security checks coming in, about 6 different income streams now. And so they are now retired. They've got surplus income coming in. And now, so now with the election over, they're very happy, right? They're like, okay, this is great. I'm glad to see what, these policies and the direction our nation was going. We didn't like it. So we're very optimistic, but they know that they're only playing around and risking that 30% right there. Right. Does that make sense? I mean, so then you can more so go, okay, well, if this thing goes down, I hope not, but if the markets crash 50% like back in 2008, we're not going to be happy, but we don't need this money for at least 5 years. Mm-hmm. The other money, the bigger bucket of money, we are accessing right now. So when you have that proper plan in place, you want to also think about time horizon. Okay, when you might need this money. So the money that you might need now or near term, that needs to be very, very low risk. The stuff that's in the stock market, that needs to be for down the road, or maybe you might not ever even touch that money. It might be for your kids or grandkids.
So, Brandon, this is a prime example of having multiple buckets in retirement. You talk about that a lot. So explain that a little bit more.
Yeah, so multiple buckets. So you want to think, if you were sitting in front of me, I would have this on on my TV screen, but it's 3 buckets. Okay, and it's more. The first one here would be your near term, or the money that you need right now. Okay, so this is money that we want to have very little possibility of it going down. Okay, assuming a market crash happens, we need this money to be very, very low risk. So if that's the parameter for the first one, we got to talk through. Okay, well, what do you like? What would fit that would have limited losses? And so we got to talk through, okay, well, that's why we like some of the best, no fee annuities that are out there. Okay. They've gotten so good. The best actually in the last 15 years, as long as I've been doing this, planning retirements, the annuities have not looked this good as they do right now. And that is because these insurance companies, when we hand them your money, they go buy the 10-year bond, and the treasuries right now are at, 4.5% to 5%. Okay, so they're very high, so you're able to get a lot of income off of giving them maybe a very little amount of your money. So we start developing that and looking at, okay, what are some low risk income producing strategies? So that's our first bucket. The middle bucket, now we start getting, is kind of like the porridge where it gets a little bit warmer. Okay. So the middle bucket here is we're going to start adding in some little volatility right here. Right. And our time horizon goes out a little bit further. We might need some now or in a year or two out of this bucket. But here's where we could add in some things of some nice broad ETFs. Okay. Some exchange traded funds that's going to have a lot of diversification and a lot of exposure across multiple asset classes. So we can look for ETFs and things that are dividend producers, right? Something that's more income, but we know that it could go down. Okay. We could have some fluctuation here. With this money, right? So that's your second, and that might have a pretty nice sizable chunk there too, maybe even equal to what was in bucket number 1. Okay. The third bucket is I call that the sexy growth bucket. Okay. Sexy growth. Right. So there you go. So that is the money where we're going to be investing for big time. I'd love to double that money in every 5 to 7 years would be great. So if we can average maybe 10% or even better, then yeah, you could do that. But that's going to have wild swings. We could have individual stocks in this bucket here. Now, this one, I also like this to be maybe your Roth IRA. So as we think tax status on these monies, these dollars here, these accounts, I want your tax-free growth to be in that Roth bucket, that third bucket there. So that's how we do it. That's kind of a really quick overview of thinking of time horizon. When are you going to need the money? And then what is the purpose of that money? And so we start dropping it in all 3 of those buckets for your benefit.
So you've got the now bucket, you've got the porridge bucket, a little volatile there if you need it. And then the sexy growth bucket.
Yes.
By the way, that was the name of my high school band, Sexy Growth.
That's a hat right there, Sexy Growth, right?
Sexy Growth.
That is a band name.
Hey, BowenWealth.com, 843-890-2400, helping you build buckets to benefit you now, but most importantly, to prepare you for retirement. No cost, no obligation, consultation. Again, that number you can call, you can text, 843-890-2400. We have a representative standing by, a team member standing by right now, or of course, BowenWealth.com. I want to get back to talking about tax strategy here for a couple of seconds, because you could be in the best mood ever this weekend, but you're still going to have tax issues. So with the Trump tax cuts, they are set to expire at the end of 2025. However, with what happened this week, is there a chance that he could extend them?
So you're saying there's a chance.
There's a chance.
There's a chance, yeah. So for at least, maybe 3 years now, I've been saying this and talking about the Trump tax cuts and how they are set to sunset or go away after 2025. And that was so far down the road, it felt like. But it's like right here now, right? Okay, so we're finishing up 24. And then, so we have this year, just a few more weeks. And then 2025, that is the last year that we have our current tax rates, okay, the tax rules, everything that's in place for individuals. For this to change, so when Trump did these Trump tax cuts, what he did was he made them bigger, where you could make more money in each one of the brackets, and those brackets went down about 20%. So the 10% stayed the same. The 12 though was 15, and it went down 20% down to 12. So really nice reduction. So we were able to have more income at a lower taxable rate. So that's been the case since since 18 through now. So what's got to happen is, to pass anything, the House has to come together and agree and put a bill together. Right. The House, then they send it up to the Senate. The Senate votes on it. And if they pass it there, then it goes to the president's desk to be signed into law or vetoed. Right. So we know how legislation is passed here. So this has to happen here quickly. And this is going to be the topic of much discussion here as we head into 25 is, okay, what are you going to do? Tax policy, tax changes. What are we going to do? Right. Because also the standard deduction that everyone gets to take, unless you give more to churches and charities, more than what's allowed in that standard deduction, then you might itemize your deductions. But most everybody uses the standard deduction. Well, that thing got much bigger with these Trump tax cuts. So if we have to go back to before, then the rates are going to get smaller in each one of these brackets, and they're going back up to what they were. So, I would say everybody listening, this is important. I want them to extend and make the individual permanent. I want them to make them permanent just like corporate. But that is one thing we are definitely watching. And so how this applies to you listening, really if they extend them or even if they don't, if you've got big accounts that are tax deferred, okay, like your 401k, IRA, if you've got accounts that you haven't paid Uncle Sam yet, then pick up the phone here because you need to have a plan in place of when you're going to start letting him tax that money. Because if you don't, if you just kind of leave it alone or sip on it or whatever, by age 73, that's when the required minimum distributions are forced upon you. And who knows what tax policy might be. Let's say the electoral process here, it swung very much in the Republicans' favor. If this opportunity is squandered, I guarantee it's going to swing back all the way to the Democratic side. Next cycle. So they might have all three branches here in just 4 years. And that might be just in time for you to turn 73 and who knows what tax brackets and your RMD. And so what I'm saying is if you've got a lot of tax deferred money, let me design a tax strategy for you to start moving that money from a pre-tax position to an after-tax position, right? Because if we can do that, we might utilize Roth conversions. And if you pay those taxes now with these lower rates, it's then off the radar to the government later on. So tax planning should be a major part of your financial decisions this next year, 2025.
We are almost $36 trillion in debt. So yes, taxes may be on sale right now, but they got to start paying down the debt some way, somehow. And I got to believe, Brandon, that's going to come in the form of taxes.
Yeah, it's got to. And I want to speak to past presidents and different presidential cycles, okay? Because you might think, if you haven't noticed, I'm a conservative. I agree with those policies more often, more so than the other side. I've gone through and I've looked at, there's some nice charts online. I'm going to actually post this on our Bowen Wealth Facebook page so you can go there and check it out. But it shows the S&P 500 with each president. It actually goes all the way back to 1970, before 1970. But let me pick it up through the Clinton years, okay? 1990s. So when Clinton was in, we had a massive run up in the stock market. Now, a lot of that was due to because the 401k was pretty new. 401k was pretty new. That happened in 84, but it really didn't get started to get adopted by companies until the 90s. Okay. And so that was one major reason. So we had this huge run up in the 90s there. So during the Clinton presidency, those 8 years, the market went up over 200%. So then he finishes, and that's right at the year 2000. Well, we know what happened there. That was the .com bubble at that point. So then that's when George W. Bush goes in, and we had the .com crash. He was there for 8 years, and then he left in 2008, right at basically at the bottom of the '08 crash. Okay. So during the Bush 8 years, the S&P was negative 36% during that Republican president. So then Obama comes in basically at the bottom of the '08 crash, and it went up 181% during Obama. Then Trump comes in, and he did about 67% during the Trump presidency. Of course, there was COVID in there, but it did finish at all-time highs. And then Biden comes in, and you know where we're at now, right? Still more all-time highs. So when we look back, the market has done better under Democratic presidents rather than Republicans. Okay, so that is quite interesting. Is that surprising to you, Mark?
A little bit, yes.
And I think also it points out two things. Okay, the first is that when Republicans come in, a lot of times they have to kind of cut the bender off, quit all this spending. We've got to balance. Well, we hadn't balanced the budget in a long time, but a lot of times like, hey, we got to knock this off. We can't keep doing this, right? So then the markets are real choppy and not as good as where it's just yes to everything when Democrats are in there. Okay, that's the first thing. The second thing this tells me too is that the markets, when you think back, a lot of times the market is independent of a presidency, okay, and who's in the office, right? It's much more dependent upon things like the Federal Reserve, okay, what's going on there, inflation, what's going on there. And so as we sit here now, this is why I say buckle up for this next year, is because we're at all-time highs here. These valuations of these companies, it's not just some random number and it's not just all on optimism, but these companies have to have, on their quarterly earnings calls and stuff, they've got to be bringing in revenue to support a certain stock price. And if that stock price, if they're saying, okay, we missed on our revenue here and the expectation was much higher, they'll say, okay, they've missed, and it starts to sell off. So these companies like this NVIDIA, some of these that are just like unbelievably high and over 30 times their earnings, I mean, it's ludicrous, right? Some of these earnings that are out there. So we believe that a lot of these companies, they cannot continue to stay at these levels. They're not making enough money. They're not supporting it, and so at some point, something's going to happen and these things have got to come all the way back down. It's a free market. These stock prices have got to come back down to where people feel confident again. So that's why we say, hey, markets are way, way up. Only risk an appropriate percentage, whatever you're fine with, having big time volatility. But at the same time, you've got to have that income plan in place so that you can withstand and give that time to come back later on.
843-890-2400. Again, 843-890-2400. The importance of having a proper plan, regardless who's in the White House. It's your retirement. It's your money. BowenWealth.com. And Brandon, I want you to talk to the adults that are in that red zone of retirement. They're hoping to retire in the next 3, 4, 5 years, probably during the Trump administration. What would you tell those adults right now?
I would say you've got to get your plan in place. As optimistic and excited and as you might be right now, I would say come in, we can have a toast together, but we've got to get just like a disciplined approach. We've got to get your income plan established. We've got to get that income plan established. And then let's talk about, okay, once you got enough income coming in, how much money is left over for you to then risk in the market? So then we'll take that appropriate risk, because I want you to be as excited as you can, but maybe if you're only risking in the market, maybe 25 or 50% of your life savings. It only takes one crash for the whole thing, for you to wreck the whole plan, right? For you to wreck your whole life savings, right? So pick up the phone. If you've saved $500,000 or more and are nearing or already in retirement, let me provide a full-blown second opinion on everything you're doing, and we'll start designing that income plan. We'll look at options to reduce your risk in the market. And we'll also have a tax plan for you to start looking, okay, how and when do we bring some of that tax deferred money over, pay our taxes, and make it tax free from now on? So again, the number is 843-890-2400. 843-890-2400.
Thanks for listening to Charleston's Retirement Coach Podcast with Brandon Bowen. To learn more, visit BowenWealth.com and join Brandon for his radio show, Charleston's Retirement Coach, Saturdays at 11 a.m. on 94.3 WSC.
Financial professionals are not licensed in all 50 states. To find out if J. Brandon Bowen is licensed in your state, please call 843-203-2030. J. Brandon Bowen is an investment advisor representative of Bowen Wealth, LLC, a registered investment advisor. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. J. Brandon Bowen is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Bowen Wealth, LLC, insurance licensed in South Carolina. Market Guard is a registered investment advisor with the SEC and provides model portfolios only to Impact Partnership Wealth. Market Guard makes no implied warranties or representations and is not liable for any data presented.